A very good morning from Khandwala Securities Limited and welcome to Monday's trading action at Dalal Street, dated June 13th, 2022. Well, Nifty ended with sharp losses in Friday's trade after the European Central Bank said it planned to raise interest rates in July. This Monday morning, selling seen worsening. The negativity can be attributed to a weak session at Wall Street in Friday's trade, which closed sharply lower, with Dow Jones Index tanking 880 points after the US CPI surged 8.6% year over year in May, the fastest pace since December 1981. A hot inflation reading is bolstering expectations that the Federal Reserve will continue to aggressively hike rates in the second half of this year, even with signs of economic slowdown. Also, the US Consumer Sentiment Index for June dropped to 50.2, down 14.2% from May, the lowest value this decade. Honestly speaking, the crash in consumer sentiment means that consumers are more and more worried about future economic conditions, confirming that global GDP growth is slowing. That brings us to our call of the day, which suggests bears will continue to attack the Lal Street. Nifty should nosedive as inflation remains a hardest beast to tame. Now, before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty closing price 16,202, sell at current market price, strict stop at 16,507, target 16,121 and then at 16,000, aggressive targets at 15,739 mark. Bank Nifty closing price 34,484, sell at current market price, strict stop at 35,721, targets 34,179 and then at 33,759, aggressive targets at 33,000 mark. The Federal Reserve will hold its two-day meeting on June 14 to 15th. The latest FOMC meeting minutes have pointed to further aggressive increases ahead. So, economic projections and Jerome Powell's commentary will be closely watched. The street is already expecting 50 basis point rate hike in June policy meeting. The Fed officials are almost certain to raise rates by half a percentage point, so markets will be driven mostly by their future projections. The US 10-year Treasury has spiked to 3.157%. The street now expects it to flirt with 4% by the end of 2022. The unease over runaway inflation is almost contagious. Oil prices remain the biggest villain, which can bring back concerns about the inflation, economy, and earnings back on the front pages. FI selling continues to intensify as macro data on the inflation front continues to dampen sentiments. FIs have been net sellers for 8 consecutive months, net offloading more than Rs 3.45 lakh crore since October 2021. The net outflow by foreign portfolio investors from equities reached to Rs 1.81 lakh crore so far in 2022. In the week gone by, FIs have net sold shares worth Rs 12,662 crores. The Nifty options data for June series suggests Nifty is likely to be in a trading range of 15,500 to 16,700 zone. Maximum call open interest at 17,000 followed by 17,500 strike price. So 17,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 16,000 levels followed by 15,500 levels. Call writing was seen at 16,200 and then at 16,300 strike price, while there was meaningful put writing at 16,200 and then at 16,000 strike price. Our chart of the day is bullish on Maruti and M&M with an intermonth perspective on any corrective dips, while is bearish on stocks like India Mart, India Bulls Housing Finance, Dixon Technologies and SBI. That's all we have for now. For any queries, do contact us at 022 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.